Hi guys, I'm Pietro from TrendingKitchen.com. Just a few seconds before watching the video, I just want to make sure you subscribe this channel, not only to keep you updated of all my free video contents, but also to contribute to the sharing of this and the others contents in a totally free way. So please subscribe the channel, drop me a like, but above all, I just want you to use the comment section below to let me know what do you think about this content and what you want to see more. Okay, thank you very much, and now let's go back to the video. Okay guys, welcome to this new free video content. Today I will speak about trend lines. Okay, about trend lines in a very complete different way. But first, let me tell you something quite important that most part of the traders doesn't understand yet. Institutions, huge banks, hedge funds, all that stuff use the liquidity of retailers to move the market. Okay, they use us, so they need our money, our stop losses. I tell you that just because I'm amazed when I meet traders who believe that institutions do not know where the stop losses of retailers are. Guys, let me know something. They know everything. They have software that reads exactly where our entry is, our pending orders are, our TP or stop losses are. Okay, I hope this is really understandable to you. What does this mean? It means that opening orders using the classic patterns, the classic schemes, those that you can easily find on the internet, those who has in which you have to set multiple indicators of Fibonacci 61.8, the breakout strategy, the retest of the trend line, which is something that we're going to see right by now, the crossing of the moving average, the Bollinger Bands. All these traditional schemes cannot work, okay, simply because they were made, they were created by the institutions to allow them to play their game, and they played their game with by our money. This is why the 95% of traders lose money, just because they don't understand the real logic behind the market. Trend lines. First of all, how to draw a trend line, because it seems impossible, but most part of the traders doesn't know how to draw a trend line. I will show you my personal way to use and to draw trend lines. I go on a line chart. Okay, let me first show you how most part of the traders draw a trend line like this. Okay, or maybe from the lower the week to the lower of the other week, or maybe on the closing of the candles, or maybe something like this. Okay, so as you can see, no, it's just something to just to show you, but as you can see, 1, 2, 4 trend lines with and all the four ways to draw this trend line show us a completely different overview of the market. Okay, I go on line chart and I take the closing. Okay, so this is a trend line. Okay, this is the way that I use to draw a trend line. Okay, then I move on a traditional way. As you can see in the traditional graph with the candles, as you can see, this trend line respects the way that the market, the trend of the market on this point of view. Okay, and as you can see, here is the retest. Okay, so as you can see, look how many times price, how many times price touch the trend line. Okay, here, this is the correct way to draw the trend line. Okay, 1, 2, 3, 4, 5, 6 times. Okay, same thing on the upper band of the channel, like this. Okay, it doesn't need it to be perfect. The trend line is a dynamic support and resistance. So we need the trend line to understand the direction of the market and the strength of the market. Okay, as we use the same thing for support and resistance, there is not a precise price level. It's something, it's a zone. Okay, this one. Okay, oh sorry, and this one. And as you can see, if we move on a candle overview, this suit perfectly with the wicks. Okay, so this is the correct way to draw the trend line. Okay, so what's next? Let me show you the traditional ways to the classic way to trade the trend line. So we have the trend line, maybe we have the channel. What does most part of traders do to trade the trend line? So we have a channel, breakout. Okay, so a lot of traders open a short here, okay, with stop loss maybe a few pips above the higher high, and TP here more or less. Okay, this is the first. The second one, obviously, so with the breakout, okay, of this level, okay. The first way, obviously, to follow the trend. So we have 2, 3, 4, 5. Okay. So you can take your long. Sorry, where is? You can take along here with the breakout, or with a stop loss, few pips here, or obviously here, which is better, just because we long when price is oversold. Okay, so we have a statistic from our side. Okay, another way to trade a trend line, another way is this. So we have the channel, okay, same thing, breakout, retest, and short. Okay, so short here with stop loss few pips above the higher high, and obviously you have to be sure that the risk to reward ratio will satisfy your money management, etc. Okay. Okay, so all these ways to trade the trend line, they are not profitable. Okay, they are not profitable, just because all these ways to trade the trend line are common ways, are retailers' way. Okay. And so the smart money players, so institutions, huge banks, hedge funds, they know that. They know this is a typical way to trade by the retailers. So what they do: breakout, retest, and then carry on. Okay, keep on going on a trend by trend. Okay, this is something that they usually do every time or every day. Okay. Another example, let me first remove the drawings. So we have the trend line, breakout, and then fake breakout. Okay, we are short here, with stop loss here, breakout, TP here, and stop loss is hit. Okay, this is a quite standard movement of the price that institutions daily makes. Okay, so how can we avoid this kind of movements? There are two patterns. Okay, two patterns that I usually use for trading trend lines. Okay, let me show you which they are so the first one, first of all, sorry, we have to have an overview, okay, an overview of a multi-frame, multiple time frame analysis. Okay, so we must find the structure, okay, in the higher time frame. This is very, very important. Okay, later I will show you an example, but this is the first pattern. So what we usually do is take short here on the retest. Okay, but as I saw you before, the market will do this kind of thing. So what I do, I wait for this breakout. Okay, so I made the same thing but with this kind of breakout. Okay, so in this case, I'm pretty much sure that this is not a manipulation. This is a real trend changing of the market. Okay, so I put here the entry always with the retest, because I don't really believe in breakouts. Okay, I don't believe in breakouts just because let me remove just because lots of time when price makes breakout, then price will retrace in a very strong way and keep me out of the trade. Okay, so make this kind of movement. So what I can do, I wait for the market to break the first time, retest, and break the second time. Okay, in this case, I'm pretty much sure that the price changed the trend, just because, as you can see, we have lower lows and lower heights. Okay, and this this is probably another channel. Okay, this is another channel. So what I do, I wait for the price to retest the second breakout. Okay, and then I go short. The stop loss a few pips above the higher high and TP, whatever you choose to set your TP and to satisfy your risk reward rules. Okay, another very important pattern which is unknown for the most part of the traders is this one. This pattern is called wolf. Okay, and so we have a channel or simply a trend line. Okay, we have let me draw with this. Okay, we have this kind of structure. Okay, remember to use also Elliott wave. Okay, 2, 3, 4, and 5. Okay, so in this case is this. Okay, 0, 1, 2, 3, 4, 5. This is just a correction, and then price keep on going, keep on following the main trend. Okay, what market usually do is this kind of thing. Okay, so breakout, fake breakout, and then retest, and then keep on or re-enter on the channel. Okay, what does this mean? It's meaning that price make a manipulation, institution make a manipulation. Okay, they make a manipulation to get all the liquidity they need to keep on going, to keep on creating this this short movement. Okay, so what do usually most part of the traders do in this case? As they see a breakout, they go long here. Okay, they go long here, but as you can see, price hit the stop loss. Okay, so what is the best way to trade this kind of pattern? Is this: simply wait for the price to re-enter the market, and we'll do this kind of movement. Okay, this kind of movement. In this case, I enter here, stop loss few pips above the higher high, and TP here. Okay, same thing here, stop loss, and here. This is a wolf pattern. Okay, and we have an example. We have an example here. We have so many examples during the day. So as you can see, if this is a trend line, okay, let me see here in on the line chart. Well, pretty much perfect. This. Okay, look here. Look here. So as you can see, all these wicks, this one, these are all manipulations. Okay, this, what does it mean? It means that in this case, buyers, just because we are on a bullish overview, want to get all the liquidity possible to complete the pattern. Okay, to go and take the trade here where there is this inefficiency. Okay, this one. Okay, as you can see, fill this empty zone without orders. This one. Okay, this is the meaning of inefficiency, and go finally short. Okay, with this retest. Okay, fake breakout and retest to this zone, which is this one. Okay, this is the same idea, the same concept of the head and shoulder, but this is the reason for what head and shoulder is created. Okay, sellers move here, then take the liquidity, make a lower lows. So this is a strength of this is a signal of weakness. Take the liquidity here, this higher move, okay, big move here, and where is here we can go short. Okay, it will be better here, but as you can see, this long wick, you can go short. Okay, but anyway, we're talking about trend lines now. So this is all the liquidity that they are catching to take the price in this area. Okay, look at this. Look at this. Okay, I'm pretty much sure that most part of the traders, they go short here. Okay, when price broke this support. Okay, they go short here on the breakout, just because here it seems that we have a lower low. Okay, but as you can see, price turn back. Okay, turn back and carry on following the main trend, the bullish overview. Okay, what we can do, I enter here. Okay, I enter here. Okay, because as you can see, this is a clear signal the price want to go bullish again. We have higher high. Okay, here higher high. Okay, and we carry on going, having higher lows. Okay, so Wolf is fake breakout, turn back, turn the channel again, and on the retest of the same trend line, you can pretty much sure that price will move with the main trend. Okay, as you can see here, but you can enter here as well. Okay, if you see on the main overview, we have this long impulse. Okay, after this liquidity catching, this one, as you can see, this is a classical pattern. This is a classical pattern in which you can easily understand the price. The sellers have the power now, just because, as you can see, here we have the retest, the test. Okay, then fake breakout. Okay, liquidity, and then goes down, and you can see, because look how this huge movement is this one. Okay, if you compare this movement with this one, as you can see, that look at the time, look how many candles are here to bring the price here from here, and look how many candles we have here. Okay, here we have 1, 2, 3, 4, 5, 6, 7, 8 candles. Here we have 1, 2, 3, 4, 5, 6, 7, 8, etc, etc, etc. Okay, maybe 15 or 20 candles. Okay, this is meaning that sellers have now the power. Okay, so we are on a short overview. What they can suggest. It suggests that, let me remove everything here, this is a correction channel. Okay, this is a typical Elliott movement, a typical Elliott pattern, the same we saw before. Okay, 0, 1, 2, 3, 4, and 5. Okay, the 3 could be this one, the 4 could be this one. Okay, you don't have to sell on 0.5, you have to wait for a structure, okay, or for an inefficient zone, like in this case, or where emission was before, so in this case, okay. Here, let me show you this. This is a very good pattern. That's because here buyers win, okay, against the seller, and goes up, and then in this case, so as a sellers broke the last buyer dominance, okay, this is a very good one, because you are pretty much sure that in this area there are lots of seller volumes, okay, lots of seller volumes. So this is a very good price level in which you can trade, okay. So in this case, another pattern, the first one I told you before. Okay, in this case it will be good also the retest, just because we are on a bearish overview, but I always wait for the breakout of this support, okay, like in this case, perfect, okay. Candles is closing below this support, okay. I wait for the final breakout, and I enter here, okay. We miss lots of pips here, probably yes, but in this case I'm very sure that price is going down, okay. Also because I can snipe this trade. I can put my stop loss just a few pips before the breakout, and so we have a very risk reward ratio, okay. This trade will I'm pretty much sure that this trade will go at least to complete this inefficient zone here, okay. So as you can see here, we have risk reward ratio 7, okay, which is pretty much good, okay. I want you to show you another example on euro, Australian dollar. So let me first do a quick analysis. So here we have a channel. So this is the traditional way to draw the trend line, and this is my personal way. As you can see, perfect touched, okay. Here look the how many times this trend line worked, okay. Breakout, retest, okay. Higher lows, and then here, sorry, this is the high, so I wait for the retest, for the price to break this resistance, okay, and then here here I know that we are on a bullish overview, okay. on a bullish overview. Some trades go long here with stop loss just here, but is too far. I really don't like this kind of trades. Okay, I really don't like. But anyway, let me show you this one. So sorry, another line. This is another channel, okay, in which we have this kind of trend line. Okay, we have a trend line, this one. Sorry, this one. Here, okay. As you can see, the price touch here, and here as well. Okay, but as you can see here, break the trend line. So let's move down on candles overview. Okay, this is a breakout. So most part of the traders go short here, and as you can, with stop loss with TP here, I suppose, and stop loss just a few pips before above this high. But as you can see here, stop loss is hit. Okay, I will wait for this trend line to be broken to go short on the retest. Okay, on the retest, as in this case, for example. Okay, as in this case, so break this support here. Okay, break, and then here I can go long. Stop loss, sorry, stop loss just a few pips before this low, and then now what I suppose that price will move here. Okay, anyway, this is a trade. This is a trade that in which I entered. Okay, this is a wolf. So break, fake breakout, price re-enter the channel, retest, and then go long. As you can see, this is the same structure. Okay, this is a demand zone. Okay, in which, as you can see, we have so many price is rejected so many times. Look how many huge wicks we have here. 1, 2, 3, 4 here. Okay, then finally breaks. Okay, so it breaks the trend line, but then re-enter, and then here I open long. Okay, I open a long position. Stop loss, you can also use the lower of the structure. Okay, the lower level of the structure, or if you prefer to be safe, to be safer, you can use you can set your stop loss just a few pips below this higher high, and as you can see, we have also here a risk reward ratio 3. Okay, this is a typical example how to avoid this kind of situation and fake entries. Remember to consider the huge structure, the huge trend, which is now bullish. Okay, and you can also recognize this just because price try to break this. Okay, the structure here the structure is broken. Okay, sorry, let me remove everything. So here the structure is broken, we have a higher high, okay, and we don't have a lower low. So buyers carry on pushing, okay, this level. Okay, so now I wait for the last seller dominance, that is this one. Okay, the last candle in which sellers had the power, I mean, okay, to be broken. Okay, to be broken. And then I'm pretty much sure that price will move on a bullish overview. Same thing here. This is the buyer dominance. Okay, this is a structure. Okay, in which, as you can see, price reacted very good once, and then create this this pattern in which carry on pushing this zone. Okay, until the price will break this structure, we are on a bullish overview. No way. Okay, this is very important to recognize the environment. Okay, the biggest role, the biggest way in which market wants to go. Okay, guys, so we're finished for this video. Thank you for watching. I will really appreciate if you drop a like on this video, but first of all, I want you to use the comment section below to let me know what you think and what you want to see more. Okay, thank you guys, and see you in the next video. Bye.